So guys, with less than a couple of weeks left here in 2024, I want to share with you my dividend investing strategy going into this upcoming year. So in this video, we'll be talking in depth about the current state of my portfolio, both the good and the bad, as well as what my game plan is for 2025. But before we get to that, guys, leave me a comment below and tell me about some of your investing goals for this upcoming year. I'd be curious to hear what you have planned for your portfolio in the new year. So guys, just taking a quick look at where things are at right now over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download the spreadsheet in the description of the video. But at this point in time, guys, between my main taxable brokerage account and my Roth IRA, my overall combined portfolio value is sitting at $87,142. And looking at my projected annual dividend income moving forward, this is currently sitting at $3,009. So we officially crossed the $3,000 mark, which is awesome. And with that said, both of these numbers represent really big jumps compared to this time last year. I was heading into 2024 with a portfolio value just under $60,000, so we were able to add, about $28,000 to the portfolio just in the last year. And on the dividend income side of things, we were able to add about $550 to the projected annual income here in 2024. And now switching gears and taking a look at my portfolio performance over here on Snowball Analytics, which is another portfolio tracker that I use pretty religiously. And outside of my free dividend portfolio tracking spreadsheet that we just saw, this one is one of my favorites. This one is a beast. And if you're looking for something with more bells and whistles and more features and functionality than your standard spreadsheet, then I'd highly recommend you check this out. And the cool thing is you can try out Snowball Analytics for free. In the description, there's a link to a 14-day trial, and I highly recommend you give it a shot because I know you're going to like it. But anyway, guys, before we take a look at this year's portfolio performance, let's do a little recap of last year, 2023, where my portfolio was up about 13.25%. Really not too shabby, but as we can see, it underperformed the rest of the market. The S&P beat me out by about 10%, and the NASDAQ totally kicked my butt with a near 50% gain in 2023. But with that, I still was able to outperform SCHD, which was only up 4.7% for the year. So overall, we did underperform the market, but we still saw some gains, and we still outperformed SCHD, so it wasn't all bad. And here in 2024, guys, it's going to tell a pretty similar story, although we kept pace a lot better with the rest of the market this year. In 2024, my portfolio, at least, with these last couple of weeks left, my portfolio is up 21.6%. So pretty strong performance here in 2024, but I still underperformed the S&P 500 by, it looks like about 5.9% right here. Really nothing too crazy. And I also outperformed the NASDAQ, which was up 30.6% here in 2024. So I'm down about 9% compared to the NASDAQ, but still outperforming SCHD by almost 10%. But with that said, if we jump over to Charles Schwab now and take a look at my portfolio performance going all the way back to when I first started my channel, all the way back October 15th, 2020 is when I posted my first video here on YouTube. Across this longer period of time, we're still looking really good. My portfolio overall is up 95%, which as we can see, interestingly enough, in this time period is still outperforming the rest of the market. Since October 15, 2020, the S&P is up about 85%. The NASDAQ's up 69.3%. So we are outperforming. And if we look at this on an annualized basis, this results in a 17.4% annualized return for my portfolio, a 15.9% return for the S&P. So I'm beating it by, 1.5% here on average, and I'm outperforming the NASDAQ by, looks like almost 4% on average. So when we zoom out and look at the historical performance of my portfolio, even despite these last 2 years, we're still holding up pretty well against the rest of the market, which is great to see. But with that said, will this outperformance continue? I have no idea. At the end of the day, I really don't think I've had a long enough time in the market to really gauge the long-term performance of this portfolio. At this point, I've only been investing for coming up on 5 years now, which in the world of investing really is just a drop in the bucket. What I have noticed so far, though, is when the market is bullish and things are moving up, my portfolio tends to see some pretty decent gains. We still move in that direction as well, albeit not as much as the rest of the market. This is at least how we just saw things play out these last 2 years. In 2023, where I was up 13.24%, but got my butt kicked by the market, and also in 2024 where my returns were better and I didn't trail the market by nearly as much. Now on the other side of that, another thing I've noticed is that when the market is bearish and when share prices across the board seem to be going down, my portfolio tends to show a bit more resilience than the rest of the market. A great example of this was in 2022, which was a tough year for a lot of investors. Both the S&P 500 and the NASDAQ experienced massive drawdowns, double digits across the board. But while that happened, my portfolio was basically break even that year. It didn't experience the same volatility or nearly the same level of losses, which was a major win in a pretty difficult year. And honestly, I've come to look at this dynamic in my portfolio, middle of the road gains when things are going up, but much more defensiveness when things are going down, as more of a strength and a good thing rather than a weakness or a bad thing. And over time, this middle of the road approach, still gaining some during good times and losing much less during bad times, can actually deliver better results overall. And I think that's what we've seen play out in my portfolio so far. If the market falls 20% and your portfolio only falls 2 to 3%, you don't have to recover nearly as much to start making gains again. Whereas the more drops that you see in your portfolio, the more you're going to have to claw your way back just to get back to break even. And this is why more resilience and defensiveness can lead, not always, but can lead to outperformance over the long term, even if you don't capture every bit of the upside when the market is soaring. But with that said, I still don't want to downplay the performance of my holdings. I've had quite a few do really stinking well this year. And we talked about this a couple of weeks back in one of my recent videos showing my top 10 best and worst performing positions for the year. But just to recap the best and worst three, Williams-Sonoma by far was my best performing position this year. No surprise, up about 77%, including both share price appreciation and dividends. And then in second place, believe it or not, was Altria Group, who, on a total return basis was up 45.6%. Very strong performance from Altria. And then in third place, we had Main Street Capital Corporation, who was up 35.4%. But then guys, looking at my worst performing positions this year, Johnson & Johnson was in the number 3 spot. This was my third worst performer. And I'm actually in the red on this position now, but in 2024, my position saw a 4% loss. In second place was WP Carey, who was down 6.5%. And then my worst performing position for the year, which was actually my most recent addition to the portfolio, this one is Clear Secure. And I'm down 13.3% on my Clear position so far. But still guys, overall, we were up quite a bit this year, even with some of those losses. And if we look at the breakdown of returns on a monthly basis here, we were able to pull off some really solid months. I mean, in March, I was up 5.8%. In July, just a few months later, I saw a 6% gain. And then recently here in November, I saw another 5.8% gain. And there really wasn't too much red. My worst month so far was in April, but so far December is, giving it a run for its money. Just halfway through the month so far, I'm down 2.5%, and we'll see how things finish up, but it's looking to be not a great month for me. Either way though, guys, we've made some really great strides in the portfolio this year, and I couldn't be happier with the direction things are heading. We are getting so close to hitting 6 figures in this portfolio, and we're a lot closer right now than I thought we'd be by the end of the year, to be honest. So I'm happy to see that, and we'll talk more about it later on in the video. But first, I want to show you what my biggest buys were here in 2024. All right, guys, so here's the full spread. Here are my biggest buys in 2024. In first place, the most money this year went to Visa. And in total throughout the year, I invested about $6,100 into this position, which was great. One of my goals for this year and moving forward is to make Visa the largest individual position in my portfolio. And it would be there if not for the strong performance from Starbucks, which is also on this list. And we'll get to that in just a moment. But in second place, guys, the second most amount of money went to SCHD, which is no surprise considering I dollar cost average into this position every single week. But in total throughout the year, I contributed about $4,300 to my SCHD position, which makes it the overall largest position in my portfolio. And then getting to Starbucks, in total throughout the year, I invested almost $3,100 into this position. I picked up a lot of shares when Starbucks saw that crazy drop earlier this year when it was sub $80 per share. I loaded the boat on this position, and I'm glad I did. But then in fourth and fifth place, we have the 2 newest additions to my portfolio. In fourth, we have Vici Properties. In total throughout the year, I invested almost $3,000 into this position. I totally would have grabbed more shares if it didn't see a substantial run up soon after I started buying. But I was able to pick up about 100 shares. I think my average cost is just below $28 per share. So far we're sitting pretty with Vici Properties. And then my fifth biggest purchase was Clear Secure, which I'm still actively adding to every single week and have been for these last probably 2.5 to 3 months now. And as we saw a few moments ago, Clear Secure is my worst performing position for the year. So I've been averaging down on my position, bringing my average cost per share down. And now officially it's sitting sub $30 per share, where when I first started this position, my average cost was more like $33. So we have made some progress in that department, which feels good. And after all of these transactions, guys, this is what the current top 5 in my portfolio is looking like right now. In the number 1 spot, my largest overall position, like I mentioned a moment ago, is SCHD. Now in second place, we have Starbucks, which is only in second place because of the substantial run-up that it saw earlier this year, or that it has seen this year, I should say. Now in third place, as a result of all of my contributions, we have Visa, and I'm seeing a pretty decent gain with Visa so far too, so that's definitely helped its case. And then in fourth place, strictly due to the strong performance, I mean, as we saw, Williams-Sonoma was by and large my best performing position in 2024, but that's pushed it into the number 4 spot. And then in fifth place, my fifth largest position is actually VOO. VOO, the S&P 500 ETF. And like with SCHD, I dollar cost average into this every single week. So no surprise to see this one in the top 5. Now comparing my current top 5 to my top 5 largest positions from last year, so we can see the only constants here are SCHD and Starbucks, which have gone from the number 4 and 5 spots into numbers 1 and 2. And outside of that, the general trend in this current top 5 shows a shift, I think, from steady stalwart companies like Johnson & Johnson, Procter & Gamble, and Realty Income to more growthy positions like Visa, Williams-Sonoma, and the S&P 500 through VOO. When I started my Roth IRA a couple of years ago and started dollar cost averaging into SCHD and VOO every single week, I knew that that would be the eventuality. I knew that those would eventually become the top 2 largest positions in my portfolio, and I wanted it to be that way. You know, fortunately, I've done pretty well with my individual stock picks so far, and I certainly hope that continues in the future, but I feel good having a growing percentage of my portfolio in ETFs to help, you know, hedge against any mistakes I could potentially make and probably will on the individual stock side of things. Really, at the end of the day, guys, for me, it's all about managing risk, and I'm trying to do that as best as I can, and I think this setup that I have between my 2 accounts, my taxable account and my Roth IRA, is a really solid balance between active investing and passive investing. You know, while I am confident in all of my individual stock positions, things can still go wrong, and that's where having the safety net of diversified ETFs comes in handy. Like I said, it can help safeguard against some of the things that can and probably will go wrong along the way. All right, guys, so now let's talk about some of my investing goals here for 2025. But before we get to those, I do want to just quickly recap the goals that I had coming into this year. First and foremost, one of my big goals this year was to reach 300 shares of SCHD, split adjusted of course. And I'm proud to say that we hit that, guys. I'm now at about 315-ish shares of SCHD, so we crossed that mark, which is good to see. And along with that, one of my other goals for 2024 was to max out my Roth IRA. This would have been the first time that I will have maxed out the Roth, and I'm almost there, guys. I have like $500 left until it's officially maxed out, but that's a piece of cake. Pretty soon I'm going to transfer the rest of that money over into the account, so I'll make sure it's maxed out by the end of the year. That's super easy. But then, guys, my last goal coming into 2024 was to reach $3,000 in annual dividend income, which, as we saw earlier, we just made it over that mark. The projected annual income is at, you know, $3,009, so we're there. So with the exception of the Roth IRA, which in my mind, that goal is already accomplished. I just have to click a few buttons and transfer that money over. But with that, happy to see all of my goals checked off for 2024. And now, as far as 2025 goes, I've got a few pretty lofty goals for this upcoming year. First off, I want to get to a point where I'm investing $325 every single week. Right now, I'm contributing $250 per week across my combined accounts, but I'm in the process right now, guys, of transferring my wife's brokerage account over from Robinhood to Charles Schwab. And as soon as the dust settles from that, I want to start putting in $25 a week there. And then over time, continue to increase the contributions in her account, which when we combine, you know, all 3 of these accounts, my 2 accounts and then her 1 account, by the end of the year, I want the total contributions across all of these to be at $325. And I'm pretty sure we can get there. But anyway, second, I have another SCHD goal for 2025 this year, where my goal was to hit 300. By the end of next year, I want to hit 450 shares of the holy grail of dividend ETFs. At this point, you know, we have less than 140 shares to go, and with 60% of my Roth IRA contributions going toward SCHD every week, I should have no problem hitting that goal. I mean, just from my contributions contributions, I should be able to reach just over 450 shares. And obviously this doesn't account for any share price fluctuations. So that could definitely throw a wrench in things, but either way, reinvested dividends will definitely help the cause, and we'll see how things go. But then guys, my third goal is that I want to reach $3,600 in projected annual income by the end of the year. This will break down to $300 on average every single month. With the $3,000 mark just hit, that averages out to $250 every single month. And I think this one is kind of a lofty goal, but we're going to go for it. But then guys, my fourth and final goal, which I also think is a bit of a stretch, is going to be to hit $125,000 in my portfolio. And this is just talking about my two accounts, my taxable account and my Roth IRA. If the market just holds steady for this next year, I'll easily hit at least $100,000 in the portfolio, but we'll see how things go. You know, reaching for this 125K goal depends on a lot that's outside of my control. So I'm hoping the market gods are on my side in 2025. But anyway, guys, those are the big goals that I have for 2025, and we'll see how things go. It's going to be an interesting year to say the least. And with that, if you want to hear about a handful of stocks that are not in my plans, actually, I'm definitely planning on staying away from these stocks and suggest you do the same. And check out this next video right over here. In this one, you'll learn about 3 dividend stocks that many investors like to buy, but truth be told, they're terrible investments and you should avoid them at all costs. So click right over here to learn about those, and I'll see you in the next one.